Well, welcome everybody. Steven Sitkowski here. Welcome to this week's edition of my Market Insights. Glad to have you back. It is May the 6th. I want you to know that everything that we do here is for educational and informational purposes only. It is not to be interpreted as investment advice. So let's move in the markets. Chairman Powell came out pretty dovish last week. The Fed, as you probably know, held interest rates. And it wasn't so much that was foregone conclusion. It was the fact that Powell, during the press conference, when people tried to paint him in a corner about the possibility of higher rates, under what circumstances would the Fed consider raising rates, he was very deliberate in communicating, we have no plans on raising rates, and it would take extraordinary events for that to happen. And as soon as he made those comments, you saw the market moving higher and pretty much been moving higher ever since. Buffett has trimmed his position in Apple by 13%. Apple is a phenomenal business. Buffett says it's a phenomenal business, but they're not really growing. They're kind of at a status quo. So he made a lot of money on his acquisition and has pulled back a bit. U.S. economy adds fewer than expected jobs in April. This is non-farm payroll, which is really good from the standpoint of inflation and what the Fed is trying to do. You know, the Fed's biggest challenge is they've not been able to, in any way, slow down the labor market. Wages are going up, job openings are plentiful. And as a consequence, you know, when everybody has the opportunity to get work, it's a great thing. But people will go out and collect a paycheck and spend it, and that's inflationary. And I think the Fed would like to see unemployment nose above 4%, but that doesn't look like it's going to happen anytime soon. But that caused interest rates to begin to fall. 10-year Treasury was up above 4.7. It's now down to 4.494. I'd love to see it stay below 4.5. And then ultimately, you know, if it gets below 4%, that's a catalyst for the market to move higher for sure. And oil prices are still under $80 a barrel. Not a lot going on there. Things in the Middle East seem to have quieted, and that's great across the board. What to watch this week? A little bit of Fed speak today, a little Fed speak tomorrow, a little Fed speak on Wednesday. Nothing of any consequence is going to be market moving. We get the initial jobless claims that'll be coming out on Thursday. And we get consumer sentiment coming out on Friday. A very quiet week for data. That plus earnings are winding down. I don't see a lot of catalysts for the next week. Could be a good thing. Last week's heat map, look at Apple, took a big pop, 8.32%. Tesla up 7.67%. Qualcomm moved up nicely. So did Pfizer and Amgen. Some of the utilities did well. Amazon up 3.67. And the year-to-date heat map, of course, the big winner continues to be NVIDIA. But there are lots of other companies that have done very well for the last 12 months. And you'll notice a lot more green than red. And yet I still meet people that tell me for the last year they haven't made any money. That has nothing to do with the market. It is everything about your ability to be able to pick quality stocks. Sector returns for the last 12 months, you see that the S&P is up 25%. So if your portfolio is not up at least 25%, there's a problem someplace in what you're doing. We've got to get to the bottom of that. But Communication up 47%, technology 43%, discretionary 28%, financials 27%. Everything else is below that 25% threshold. Industrials 23%, energy 16%, materials 13%, healthcare about 5.5%, consumer staples and REITs, utilities haven't done much at all. Market breadth, we always like to look at new 52-week highs versus 52-week lows. On the New York Stock Exchange, looks very solid, 225 highs, 84 new lows. On the NASDAQ, it's about a push, 258 new highs, 297 new lows. Keeping score, the Dow is up 2.6% year to date, the S&P 7.5%, the NASDAQ has taken a slight lead at 7.6%, and bonds are down for the year. Biggest winners, Biotechnique Corp, Howmet Aerospace, not very well-known names. Moderna, there's Garmin, C.H. Robinson, Amgen, Aptiv, Amcor, Borg-Warner, Albemarle. So some different names up there. Wow. Where's NVIDIA? They're there every week. Earnings surprises, what happens versus earnings misses. Well, if we get an earnings surprise this quarter, stock goes up about 0.6%. If the stock misses, it's down 3.2%. So the misses have been much more punitive than the beats. Where's cash moving? Cumulative global sector fund flows for the last 12 months, it is all going into technology. Right? That's what you want to follow. Corporate buybacks are soaring. So that makes the value of already existing shares move higher. Consumer confidence has stumbled a bit. You can see that. Well, it's starting to peak out. Now it's kind of fallen down back toward the average. The JOLTS number, this is job openings, have been falling. Now that's got to make the Fed happy. Consumer sentiment is in the fear range, which is, that just tells me people don't understand. We have so many things going for this market. You've got an election coming up. The Fed is dovish. Earnings are going up. Margins are starting to expand. GDP is positive. And yet people are fearful. And I hope it doesn't keep them out of the market. Take the crumbs that the bank pays. Fed probabilities have moved up now for a rate cut in September. Last week, this was about 50%. Now it's 85%. So, and right now it is forecasted 100% probability that by the November announcement, they will have a rate cut. So those probabilities have moved up dramatically since the latest employment numbers. This week's earnings, I don't know, we can have anything that really moves the market? You know, BP gonna move the market? I don't think so. I mean, if we dug in here a little bit more, ARM, you know, they kind of give us some sense of how the consumer is doing. But yeah, most of the big companies have already announced. Let's take a look at the charts, see what's going on. Hope you're having a splendid week. I had something weird happen yesterday. Well, I didn't have it happen, but it snowed. I'm up in the mountains. Snowed on May 5th. It's kind of strange. All right, so here's what's noteworthy. See that yellow line? That's 50-day moving average. And we've crossed above that. So typically when we're above the 50-day, we get these nice runs. You never know how long they're going to last, but it's definitely a bullish sign. So we've crossed above the 50-day. The 50-day line here is sloping upward. Both of those things are bullish, neither dramatically bullish at this point, but moving in the right direction for sure. How about the Qs? Ditto, cross back up above that 50-day. So a lot of times a 50-day moving average will act as a level of support or resistance. So a breakthrough, if it holds, can be rather significant. And the Russell 2000 is also broken through. So from the perspective of the charts, the technicals, all is right with the world. Hope all is right with your world. I'll see you again next week. Until then, bye for now.